In this video I'm going to show you how easy a strategy can be and how successful it can be if you follow it step by step every single time. So, I like to call this video the power of the 5-minute fair value gap. A while ago I made a video about the 1-minute fair value gap and I went into hindsight backtesting and show you how easy it can be when applied correctly. So I wanted to do the same with the 5-minute fair value gap, but before we hop into the 5-minute fair value gap, I want to do the same with the 1 hour and with the 15-minute fair value gap. So just to be clear, this is just a strategy that I'm testing and I'm going to show you the results at the end because they're pretty amazing. Okay, first of all, the 1 hour fair value gap. We are going to align the daily and the 4-hour bias. We are going to enter every 1 hour fair value gap that we encounter that has that same bias that we established while aligning the 4-hour and the daily. We're going to put our stop loss above the first candle of the fair value gap. So as you guys know, a fair value gap contains 3 candles. We are going to put it above the first candle or above the second one, just whichever one is highest, or lowest when you have a low. Then we're just going to target 1/2 risk to reward, and we're only going to take the trade between 9 AM and 9 PM GMT plus 2. That's just 3 AM and 3 PM New York time zone, so it's basically just London and New York session. So we hopped into FX replay, and first of all, of course, we are going to establish that daily bias. So as you can see, Euro USD has been trading upwards, but over the long run, we have been in a downtrend, and we are encountering this daily order block right now, right here. So what is my expectation purely daily wise is that we can have a turnaround right here, so this will be the perfect place to sell. Then we're going to the 4-hour. As you can see, the 4-hour is still very bullish. So on the 4-hour, we have to wait for it to align with the daily so that we can take our bearish trade. So where would we want to see price come as it is right now? We want to see it break this low right here so that we are in the downtrend, and then we can go to the 1-hour. So let's wait for that first. And there we go. It just happened. So now we're going to the 1-hour and we're going to take basically every bearish fair value gap that we can find between 9 AM and 9 PM GMT plus 2. Okay, so it is 8 AM right now. The next candle that will begin is the 9 AM candle. So what are we going to do? We're going to take this fair value gap right here. And bear in mind, the fair value gap does not have to be formed inside of the window. The only thing that needs to be inside of the window is your entry. So here we have it, a 1/2 risk to reward. And let's place the order. There's a risk 1% and sell limit. As you can see, we got just stopped out right here. But the rules are the rules, and then I went to take profit. That's too bad, but it doesn't really matter. Let's go to the next fair value gap that is going to form, and it is a very large one right here. I don't know if we can do something with this, but we are going to trade it. So entry, stop loss above this one. It's a very huge stop loss. So with the 1-hour, bear in mind, these are most likely going to be swing positions. Place order, and we got stopped out again right here. So the day is over. We had 2 losses. Let's go to the next session. So as you can see, there's a fair value gap formed right here, but it is still 5 AM. So we have to wait. We can't enter on this candle, unfortunately. There is a fair value gap right here, so we are going to enter on this one. Let's take our entry right here. Let's see. Okay, this just, oh, we got tapped in right here. And we got tapped out right afterwards. So this was a nice, very nice win. Let's see if there are any more fair value gaps that are going to be formed. And there is not. Let's go to the next session. And keep in mind, guys, we're only taking bearish fair value gaps in this case. So not the bullish ones. Stop loss above here. 1/2 risk to reward. Place the order. Let's see. Okay, now there is a new one formed right here. So we're also entering this one. Place the order, 1% risk. Okay, it was immediately tapped in and tapped out. Okay, that was very nice. Let's see if there is another one being formed. No. Okay, so this was the 1-hour, guys. Let me go over the analytics real quick of the 1 hour before we go to the 15-minute. So as you can see, this is the 1 hour. We have a P&L of 4%, so $4,000 in this case. We took 17 trades and we had a 41% win rate. So with the 17 trades, we were profitable. Of course, you have to test this over the long run. Let us see. The average duration is a day and 6 hours, total trades was 17, and we did 36 days over this. So a little over a month of trading with the 1-hour strategy, and we had over 4%. So now let's go to the 15-minute fair value gap entry. Okay, so for the 15-minute, we need to align the 4-hour and the 1-hour bias. We're going to enter on every 15-minute fair value gap that you encounter. Again, that same bias is that 4-hour and 1-hour bias. Our stop loss is above the first candle of the fair value gap. We're targeting 1/2 and only between 9 AM and 9 PM GMT plus 2. So basically it stays the same. Okay, so we have a flashy new day right here. We are on the 4-hour currently, and as you can see, it is in a massive decline. The 1 hour is also in a massive decline. So let us see, what can we do? If you go to the 15 minutes, there is a fair value gap right here and a fair value gap right here. So these two are the only ones that I can see right now that we could possibly take a trade from. So let me put an entry right here on this one. 1/2 targets. Okay, so that first entry just got missed. Unfortunately, we do have some new entry possibilities right here. So let's see. This one right here. 1/2 risk to what? Place the order. 1% risk. Okay, perfect. Another entry possibility right there. 1/2 place the order, 1% risk. Another entry right here. 1/2 place the order on 1% risk. And this basically keeps on going. So in theory you should have put a new one on every single fair value gap that you encounter. But this, since we are dropping this much, quite a lot of work. So let me just do the down one, and if this one gets stopped out, we take the higher ones. Place the order, 1% risk. Okay, we have a new one right here, but it's overnight. We got take profit hits. Let us see right here. There is a fair value gap right here. So entry, stop loss, 1/2 take profit, place the order, 1% risk, take profit hit. Now let's go over the results of the 15 minutes fair value gap. And yes guys, you can of course make this so much better by adding other confluences. But this is again a video to show you how simple it can be to follow a strategy. And that is essentially the essence of your trading strategy, to make it this simple that you can follow it every single day. So with the 15 minute fair value gap, we have a little bit of better stats. 12 trades, 58% win rate. Our account has grown by 9.3%. The average duration is 8 hours and the account age is 6 days. So in theory, this would pass your first challenge in 6 days. Of course, that's just in theory. Now let's go to the last one, and it is the 5 minute fair value gap. Okay, so with the 5 minute fair value gap, we want to align the 1 hour and the 15 minute bias. We want to enter on every 5 minute fair value gap that we encounter with that same bias. Stop loss above the first candle of the fair value gap, 1/2 risk reward, only between 9 AM and 9 PM GMT plus 2. So bear in mind, I say this between 9 AM and 9 PM GMT plus 2 is just because I want you to do this during the London and the New York session. But as you saw with the 15 minute fair value gap, there are a lot of fair value gaps that are creating during this time zone. And you can only imagine how much it is going to be with the 5 minutes. So I would advise you to do this whenever you have the time for the charts. But of course, don't get lazy and do this at the same time every single day. So I would advise you to pick a kill zone. I would advise you to pick the London kill zone or the New York kill zone and to try out this strategy. I would say it is very much comparable with the silver bullet strategy. And of course, same as with the silver bullet strategy, if you want to make this a little bit better, include things like a liquidity sweep, include things like the power of 3. Like I said, the essence of this video, to make it as simple as possible, and I'm just backtesting, I'm just having fun and seeing how this could possibly work. So, 5 minute fair value gap, and let me tell you this before we get into this, this was the one that was the most surprising to me and the one that was the most exciting to me. So let's get into it. Okay, so let us see where we left off. As we can see, let's pause the video for a second, because if you're going to trade a strategy, or basically any strategy at all, and you're not trading a funding challenge, then you better have a good broker with low spreads and low commissions. In this case, I would recommend Henkel Trade. As you can see, Henkel Trade has very low spreads and very low commissions. You can already start from as low as $10 and you have up to 1/500 leverage. As you can see, Henkel also offers a 100% deposit bonus. So let's say if you're depositing $500, they will match that with also $500, giving you $1,000 in trading power. If you're interested in any of these things, check out Henkel Trade, link in the description. The 1 hour was very bullish. Then we got into a bit of a consolidation with a liquidity sweep and we went down afterwards. As the majority of the chart is going downwards, I'm expecting a bearish continuation on this one. 15 minutes, also very bearish. I don't see what this candle here was doing. Maybe it was going for this imbalance right here that is filled right now. So I'm still bearish on this one. Let's go to the 5 minute, and now we're basically going to focus on every single bearish encounter. I see it's not the beginning of the day. So the beginning of the day would be right here. So this will be a couple of losses, guys. There will be a couple of losses right here that we fortunate enough Miss right now because we started in the middle of the day. But there is a fair value gap right here. Let's put the stop loss on the first one that made it, like this. Target at 1/2, like this. And we're going to place the order 1% risk. Okay. To the next candle. Maybe it's still continuing to the upside. There is a fair value gap right here, so we have to take it. Entry. Stop loss above the first candle that made it. 1/2 risk to what? Place the order. Another fair value gap right here. Stop loss above the first candle that made it. 1/2 risk to what? And see how mechanical this is, guys. That is just so easy. But do you also see what I meant with there are so many trade opportunities, and it will be very hard to follow for you, I would say, if you're not picking time zones and kill zones in specific. So place the order. And of course, what you also could do, you could treat it like you're taking trades until you lose a certain amount, and that is something that we come to in the risk management part of this video. Or you could take trades until you win a certain amount. So that's all on you, of course. Okay, we're tapped in some more trades. We have a value gap again right here. So I think we are in a lot of trades at the moment. Let's put a stop loss above the first one that made it. 1/2 versus what? And I know it looks like a mess, guys. It looks like a mess. It does, and it will be very potentially stressful, I think. And there's another value gap right here. But just very mechanical, and we are going to fix this up, this stress, by adding some more rules, right? So don't you worry about that. This is just to show you the strategy, how crazy it can be, and also how awesome it can be. 1/2 versus what? Place the order. Another one right here. Place the order. Wait. Place the order. 1%. Another one right here. And they just keep on coming, guys. And that is the thing, guys. You need to be in a trending market. I don't know if that was clear or if you couldn't guess that before, but but you definitely need to be in a trending market. Then this strategy does wonders, guys. This strategy does wonders. Oh, there was one right here that I missed right now on this one. Damn. I missed that one. Oh, there's another one right here. Oh no, there isn't because of this huge wick. There is one right here. Another one right here. Keep on coming, guys, and it is still not time to stop. It's crazy how much trades you can get with this one. So bear in mind that it's very easy to blow your account this way if you don't have the right risk management rules in place, of course. But up to now, we haven't lost a single trade, I believe. Of course, have had a lot of gain. Very good scalping strategy, I would say. Ooh, did I jinx it? Did I jinx it right now? I did jinx it, I think. Because we start to consolidate. We are going very close to that stop loss of this last trade that we had. There we have it, our first loss. There we have it. Let's see how these other trades are going to be doing. Oh, most of them hit TP anyway. Only this big one is open, so let me delete all of this. Yes, you can win a lot. You can also definitely lose a lot if you don't apply the right rules. And if you can't keep your head cool, this strategy might not be for you to begin with. So, the strategy, the statistics. As you can see, we had 65 trades in total with a 55% win rate. And we made 40%, guys, just by targeting 1/2 with 65 trades. So as you can see, this was the performance of the days. And guys, to make it even better, this was only in 2 weeks. We started on the 1st of March and we ended on the 11th of March, so it's in 10 days. 10 days, 40% increase, 55% win rate. So, how can we use this and not blow our account? Let's go to the risk management. For the risk management rules, like I said, we are doing the 1/2 risk to a watt. So with the 1/2 risk to a watt, I want you to risk a max of 0.5% risk per trade. As you guys saw, we made 40% in 10 days with a 1% risk. So 20% in 10 days will also still be very, very good. Now I want you to keep yourself to a max of 2 losses a day. So let's say you're starting to trade, you will have a max of 2 losses a day. It doesn't matter if you lose all of the perfect opportunities afterwards. I don't want you to blow your account. And I want you to have a max of 2 open positions at the same time, because let's say things go south, you can only lose 1% in the end. So on some days, you will have 2 losses in the beginning of the day and you will have the perfect setups following afterwards. Don't stress about this, because other days this script will be flipped and you will have the perfect trades in the morning and there may be some bad trades to end with. So what you could add to this risk management strategy is, for example, a max of percentage gain. So let's say, for example, if you have 2% win, you stop for the day. This is also a very good one I would advise you to take. Another one, if you enter in 2 positions at the same time, make sure to put your first position at break even, also a very good one. This way you also limit your risk very drastically. Another one, if you don't like the max of 2 losses a day, just risk less with every loss that you take and then build it up afterwards again. So guys, I hope you enjoyed this video. This was more of an eye-opening video, I would say. To make sure you're not overcomplicating your strategy, just start with these simple beginnings and try to improve it afterwards. Let's take the strategy and let's say if you're going to trade it, try adding things on there. Backtest this the way it is, then add things on there. Add the liquidity sweep, add maybe Asian highs and lows, add ABC pattern. Like I said in the beginning, this is just the start base and you are going to add things on top of this to make this your perfect strategy. Guys, I hope you enjoyed and I will see you in the next one. Bye bye guys.